of, because the truth is that when you reach for simple sort of definitions like that, you're losing a lot of what value investing is about. It seems to me there are three core elements to value investing. And as economic circumstances change and as financial market circumstances change, how you implement those elements is going to change. And if value investing is going to continue to be a useful approach, it's going to have to adapt to those changes in circumstances. So the first thing about really where Ben Graham and David Dodd started is with the idea that Mr. Market is crazy, but he's not crazy about everything. So you have to have a sensible search strategy for where you're going to look for opportunity. Now, that's something that's changed an enormous amount as people have learned that looking for out of favor, cheap stocks is generally a good idea. And for most of the time, staying away from high priced glamour stocks is also a good idea. The sense in which that's changed is that as people have learned to do that, and I think you pointed this out actually in some of your comments to me, it no longer really works that well because it's crowded in those areas. So I think the big change that's happened is you have to be a specialist today. Because when you look for an area for you to search, ultimately you're looking for an area where you're going to be the person on the right side of the trade. And in the old days, staying away from the glamour stocks and focusing on the ugly out of favor stock did that for you. That doesn't really work anymore. Today, people seem to resist, and I don't quite understand why, because in medicine and every other field, everybody's specialized. They resist being specialists. Now, it doesn't mean just one industry, doesn't mean just one geography, but you've got to start thinking about focusing in an area where you're the expert. So I think a sensible search strategy is absolutely an essential part of value investing. And I think all value investors should be able to articulate what that is and how it evolves as old strategies become too heavily populated. The second thing, and this is in a sense why value investing is value investing, you have to know what you're buying. You can't sort of speculate on an uncertain dream in the future. You have to have a sense that this is what my return is going to be, or this is the value of what I'm purchasing. Another way to say that is, and again, because it's all about being on the right side of the trade, because every time you buy something thinking it's a good idea, somebody else is selling it to you thinking that's a good idea. You have to have a superior valuation methodology. And in a sense, that's really what the second edition of the book is all about. So it's a sensible search strategy. It's a superior valuation methodology. And then the last thing really doesn't change. It is the discipline to wait until you have a reasonable margin of safety and not to just jump in because you're bored or because you don't see anything to do. That in those circumstances, you have a good, well thought out default strategy like buying index funds if that's what you're going to do, but that you are disciplined about the actual investment choices you make. And those three things are the heart of value investing. And as I say, the first two, I think, have changed dramatically over the last 20 years.